Welcome to Channel 41. I'm Nia Walker, and I'm thrilled to be joining you all today as a financial expert. We'll be delving into a comprehensive analysis of Tesla, ticker symbol Tesla. So, let's kick things off with my price target predictions. I anticipate Tesla's stock price to reach around $370 in the next 3 months, $400 within 6 months, and potentially hit $450 in the next 12 months. Considering the current market conditions and Tesla's recent performance, I'd recommend a buy rating for this stock. Now, let's dive into the data. Tesla's previous close was $345.16, and today it opened higher, indicating positive momentum. The price has fluctuated between $210 and $361 over the past year. The market capitalization is quite impressive at over $1 trillion, reflecting Tesla's prominent position in the electric vehicle market. However, the price-to-earnings ratio is a bit high at 97.57, suggesting investors have high expectations for future growth. Tesla doesn't offer a dividend yield at the moment. Looking at the recent stock performance, we see some volatility, but an upward trend is definitely noticeable. The volume traded has been significant, indicating high investor interest. So, Jack, what are your initial thoughts on Tesla's current valuation and its potential for future growth in the electric vehicle sector?
Well, Nia, thanks for the overview. I'm Jack Mitchell, and I'm a stock analyst. So about Tesla, I do see some interesting points in the data. A market cap of over $1 trillion is indeed significant, as you mentioned, Nia, and it shows Tesla's dominance in the electric vehicle market. But, that high price-to-earnings ratio of 97.57, like you pointed out, Nia, does make me a little cautious. It kind of suggests that the current price might already be factoring in a lot of future growth. The stock's 52-week range between $138.8 and $361.93 shows it can be pretty volatile. And looking at the daily data, there are definitely some swings. We see the price going from $210.73 on September 6th to $250 on September 23rd. That's a big jump in a short time. So while the upward trend is there, the volatility is something to consider. Also, the lack of a dividend yield might not appeal to all investors.
Well, Jack, I appreciate your cautious optimism. It's true that Tesla's high price-to-earnings ratio warrants careful consideration. However, I believe the market is justified in its anticipation of Tesla's future growth. Look, Tesla isn't just an electric vehicle manufacturer, it's a technology company at its core. Their investments in artificial intelligence, battery technology, and autonomous driving position them for long-term success. The recent surge in stock price, as you pointed out, from $210.73 on September 6th to $250 on September 23rd, actually underscores the market's confidence in Tesla's innovative potential. This kind of volatility is often seen with disruptive companies, and I believe it presents an opportunity for those willing to take a calculated risk. While the absence of a dividend yield might deter some income-seeking investors, Tesla's focus on reinvesting profits to fuel further innovation is, in my view, a smart strategy for long-term value creation. So, basically, I see the current price as a reflection of Tesla's future prospects, not just its present performance.
Nia, I get your point about Tesla being a tech company, not just an electric vehicle maker, and their innovation in artificial intelligence, batteries, and self-driving cars. But, I'm still not entirely convinced that justifies the price-to-earnings ratio. A price-to-earnings ratio close to 100 is really high regardless of how innovative a company is. And you see, the stock's history shows us how quickly things can change. Like, if we look at November 2024, the price went from a high of $358.64 on November 11th down to $311.18 on November 14th. That's a pretty steep drop. So while the market might be confident now, like you said, Nia, I think it's important to remember that investor sentiment could shift, and when a stock is priced for perfection, any hiccup can lead to a big correction. I'm just saying, let's not get carried away by the hype. Tesla's financials still need to catch up to its valuation, in my view.
Jack, I understand your hesitation, but I think we need to look at Tesla's trajectory, not just its snapshots. Yes, the drop from $358.64 on November 11th to $311.18 on November 14th is significant, but it's also a short-term fluctuation in a larger upward trend. Tesla's financial performance has been steadily improving, with revenues increasing year over year. Their innovative technologies, like, full self-driving and AI-powered features, have the potential to generate substantial revenue streams in the future. I believe these advancements justify the market's optimism, even with the high price-to-earnings ratio. So, to be honest, I remain bullish on Tesla's long-term prospects. I encourage everyone watching to follow Channel 41 and remember to like and subscribe for more insightful discussions like this. Thank you for tuning in.